Hi everybody, this is Lara at Elliott Wave Gold with your end of the week video analysis for US oil for the trading week ending Friday 12th of April. The bottom line is oil, at the daily chart level anyway, is within an upward trending channel. It's within an upward trend. Assume the trend remains the same until proven otherwise. It's overbought and I'm expecting a change possibly next week, but in order to have any confidence whatsoever that there's a high in place, I need to see a breach of that trend channel with at least one full daily candlestick below and not touching the lower edge. If that happens at some stage next week, then I will assume the bounce is over and a third wave down will then have begun. The larger picture still sees oil in a bear market, because this upward movement at the monthly, weekly and daily chart time frames will not subdivide very well at all as a 5, but it will subdivide very well as a 3. With a 3-wave structure in an upward direction, that indicates that the larger bear market may not be over for oil. And so I've relabeled this big zigzag. I've moved the labeling down 1 degree and I'm now labeling it the first zigzag in a possible double zigzag for a supercycle degree second wave correction. Double zigzags are fairly common Elliott wave corrective structures. So the first zigzag subdivides 5, 3, 5 and it's labelled cycle wave W. The double is joined by a 3 in the opposite direction, which is labelled cycle wave X, and itself subdivides as a zigzag. That, by a very wide margin, is the most common structure for an X wave. This wave count is now expecting a second zigzag to unfold lower to deepen the correction and so to move reasonably below the end of the first zigzag, because that's the purpose of a second zigzag in a double zigzag. Cycle wave Y is expected to subdivide 5, 3, 5, and within it, primary wave B and intermediate wave 2, the rule is the same. Neither of these may move beyond the start of intermediate wave 1 or primary wave A above this high here. Let's take a look now at the weekly chart at how primary wave A may be beginning from this high, this point here. This subdivides as a 5-wave impulse. I'm labelling this intermediate wave 1 within a 5-wave impulse for primary wave A. And now I'm labelling intermediate wave 2 as an almost complete double zigzag ending, and so far it's moved just a little bit above the 0.618 Fibonacci ratio of intermediate 1. Intermediate wave 2 may be quite close to completion. I'm expecting it to move at least a little bit higher when markets open next week. It may not move beyond the start of 1. Let's take a look now at the structure of intermediate 2 at the daily chart level from its beginning here, this point here. It's subdividing quite nicely as a double zigzag. They're fairly common structures. The first zigzag in the double subdivides 5, 3, 5. It's labelled minor wave W. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a zigzag. And now a second zigzag labelled subdividing 5, 3, 5 may be incomplete and it's labelled minor wave Y. When I look at this little bit of downward movement at an hourly chart level, it looks like a really obvious 3-wave structure, and so this looks like a small counter trend movement, which means at the daily chart time frame this upward trend may be incomplete. And so within minor Y, I'm labelling minute wave B over here, subdividing as a zigzag 5, 3, 5 and minuet B within it, an expanded flat correction. And so minuet wave C moves slightly below the end of A. A truncation is avoided with this labelling. I've checked the subdivisions here on the hourly chart, and this has a pretty good fit. And so now minute wave C may be an incomplete 5-wave impulse, subdividing 1, 2, 3, 4, and now needing just the very last 5th wave to move beyond the end of minuet 3 to avoid a truncation. As soon as that happens, it's possible that minute wave C, and so minor Y, and intermediate 2 may all be complete, ending just a little bit above the 0.618 Fibonacci ratio of intermediate wave 1. This is the best fit channel. I'm drawing around intermediate 2 from its start to the low labelled minor X with a parallel copy up here so that it contains the entirety of intermediate wave 2. The bottom line for oil for next week again is while price remains within this channel, we should assume that this upward trend remains intact. Only a breach of this channel by at least one full daily candlestick below and not touching the lower edge of the channel would provide confidence that the bounce I'm labelling intermediate 2 is finally over, and the next wave down, a third wave down, may then be expected to be underway. After a breach of this channel, look out for a throwback to find resistance at the lower edge of the channel. If price behaves like that, which is really typical, when it does that, it offers a really good entry point to join a trend after you have confidence of the trend. Let's take a look now at some classic analysis. The monthly chart, I don't have anything to add to that this week for oil. After last completed month, there was an advanced block pattern with these 3 candlesticks here. That's a reversal pattern, but the last monthly candlestick did have support from volume, putting the reversal implications into some doubt, and the last 2 completed monthly candlesticks also had long lower wicks, which was bullish, so it's not surprising that we are getting further upward movement for the month of April. I can't comment on the month of April because it's incomplete. RSI is neutral. There was plenty of room for price to continue higher. MACD is bearish. We haven't had a bullish crossover yet. The last signal from on balance volume was bullish. This trend line now no longer has reasonable technical significance. This week there's an advanced block pattern as well. This last completed weekly candlestick has a much reduced range, putting a little bit of weakness now in this upward movement. However, it does have good support from volume, and so it looks like we may still see more upward movement next week. There is strong resistance here, about 63 to 64. Price hasn't managed to close above it. If it does, the next resistance is back up here, just below 76. ADX is still declining at the weekly chart level. There is no clear trend yet at this time frame. ATR was increasing with this prior downward movement, and now it's declining with this upward movement. This downward movement had strength. This upward movement has some weakness. It looks like it may be a counter trend movement. On balance volume is making a new all-time high this week. That's quite bullish. It's not as reliable a signal though as using on balance volume with trend lines, but it is bullish and would suggest that price may be about to make new all-time highs. That does not support the Elliott wave count, puts a little tiny bit of doubt there. RSI is still in neutral territory. There's still further room for upward movement to continue before it reaches overbought. Stochastics is overbought, but it may remain there for several weeks. It's hopeless as a timing tool for figuring out when a movement may end, when a market is in a strong trend, that is. At the daily chart level, ADX is indicating still that there is an upward trend. From this low here, there is still a series of higher highs and higher lows, and ADX agrees this market at the daily chart level is in an upward trend. Only a new swing low below this prior little swing low here would indicate, using that approach, that would indicate there may have been a trend change. Until then, we have a series of high lows. That remains intact, so let us assume the trend remains the same until proven otherwise. Volume supports the last upward movement, and now volume declines as prices moved sideways essentially for the last 3 sessions. ATR continues to decline as price rises. There is some weakness in this upward trend. While at the weekly chart level, on balance volume has made a new all-time high, it has not done so at the daily chart level, and so for the short term, there is now some bearish divergence between price making new highs and on-balance volume failing to make corresponding new highs. That would suggest, along with ATR, that this upward movement may be about to end sooner rather than later, but the upward trend does remain intact, although it is nearing extreme. RSI reached overbought. It can move back into overbought again. It's not a particularly good timing tool, but if it does move into overbought and then exhibits some bearish divergence with price while it's overbought, that would be a stronger indication of an extreme upward trend that may be about to end. Stochastics is overbought, but it can remain overbought for quite a long period of time, and yet price can continue higher. That's all from me this week with your oil analysis. I hope all our members are having a most fabulous weekend.